All right, today we're putting Amgen Inc. right under the microscope to figure out what's behind its recent and pretty dramatic price moves.
Okay, let's get right into it. After a pretty brutal summer slide, this pharma giant just had its best day in months. So the big question on everyone's mind is this a real comeback? Or is this just a classic bull trap? You know, a fake out that sucks buyers in right before the floor drops out again. We're going to dig into the technical evidence and see what it tells us.
So first, let's set the scene and take a look at this stock's recent and, well, very volatile journey.
And wow, this timeline really lays out the whole story. After peaking up near $309 in late July, AMGN just slid downhill, hitting the bottom around $271 by the middle of September. But then, bam! On September 19th, it staged this massive rebound, jumping 3.6% in just one day to close over $285.
So, that sudden U-turn brings us to the central mystery, right? Is this a real, sustainable recovery we're seeing, or is it just a temporary blip before it starts heading south again?
Okay, so to start cracking this case, we've got to look at our first piece of evidence, the trading volume. And this is where the story gets really interesting.
And our source material puts it perfectly. The September 19 volume surge confirms the reversal intensity. See, in trading, volume is kind of like a truth serum. It tells you just how much conviction, how much belief is really behind a move in the price. And the amount of conviction on that day was just staggering. Look at this. On a normal day, AMGN trades about 2.5 million shares. But on September 19th, the day of that big rebound, volume exploded to 8.7 million shares. That is more than triple the daily average. Now that is not just random market noise. A spike that huge is a massive flare, signaling major institutional interest. We're talking the big money, pension funds, mutual funds. They were stepping in and buying in a big way. And that adds a lot of credibility to the idea that this rebound could be the real deal. All right, let's pull out our forensic toolkit and see what the technical indicators have to say. This is where we get into the real nitty-gritty of the stock's health.
So this dashboard gives us a great at-a-glance look. And you can see that some indicators, like the MACD, are showing that momentum is picking up, which is great. But others, like the ADX, are telling us the overall trend is still pretty weak. So it's a mixed bag, which suggests a shift might be happening, but it's not a done deal yet.
But to really get the big picture, we have to look at what might be the most important line in the sand for any long-term trader, the 200-day moving average. For Amgen, right now, this single line is shaping up to be the ultimate test for this rebound.
All right, so after that big rebound, the stock closed at $285.41. Now, lock that number in your head because what really matters is how it stacks up against this next one. And this is the crucial line it's bumping up against, the 200-day moving average, sitting at $287.66. That tiny gap, less than a single percent. You see that? It's everything. It basically defines the entire battleground between the bulls and the bears.
So, it all comes down to this. AMGN is smack in the middle of a deciding battleground. The bull case is simple. The price has to punch through that 200-day average and stay above it. That would signal a new uptrend is beginning. And the bear case? The price hits that line, gets rejected, and confirms that level is a ceiling, which could send it right back down.
So when you take all this evidence, the huge volume, the mixed indicators, and this critical battleground, you can start to build a few credible theories for what might happen next.
But before we jump into the scenarios, these are the price levels you've got to watch. Think of these as the battle lines. The resistance levels up top are the ceilings the stock needs to break through, and the support levels below are the floors that absolutely have to hold up.
And this basically breaks down the three main ways this could play out. The bullish path has the stock breaking through that first resistance and making a run for $290. The neutral path is, well, it just kind of chops around sideways for a bit, catching its breath. And the bearish path? That's where it fails to hold support and goes right back down to retest those September lows.
So, when you put it all together, what's the final take? Where does all this evidence lead us?
The final verdict here is what you'd call cautiously optimistic. The stock is definitely showing clear signs of stabilizing. The immediate danger seems to be over. But, and this is a really big but, that shift in the long-term trend is not confirmed. Not yet. The case for a new bull market is far from closed. And really, the key takeaway is summed up perfectly right here. You need confirmation through sustained price action above the 200-day average. In plain English, one good day with huge volume is great, but it isn't enough. The bulls have got to prove they can take that hill and hold it.
So that leaves us right here, at a crossroads. The investigation has turned up all the clues, but the next few days of trading are going to write the final chapter. Will the evidence point toward a new bull run, or was this just a temporary break in the clouds? The answer really is going to depend on whether those big institutions keep voting with their money above that critical 200-day line.